Welcome to Let Me Fix This. Enjoy the video.
In this video, I will explain how to make a sales ledger. A sales ledger is a fundamental accounting record that tracks all credit sales a business makes. It's essentially a detailed list of who owes your company money and for what. This system helps you keep a clear overview of your accounts receivable, ensuring you know exactly how much is outstanding from each customer at any given time. It's a vital tool for financial health. When you create a sales ledger entry, several key pieces of information are essential. You'll need the customer's name, the unique invoice number, and the exact date of the sale. Crucially, record the total amount due and any specific payment terms, like net 30 days or due on receipt. Also, include a concise description of the goods or services provided. This detail ensures clarity and accuracy for every transaction. Creating your sales ledger involves a few straightforward steps. First, establish a separate account for each of your customers. As soon as a credit sale is made, record it immediately. Post all the relevant invoice details, including the amount and date, to that customer's specific account. Finally, it's important to regularly reconcile your sales ledger with your general ledger to ensure all figures align perfectly and accurately. Utilizing a sales ledger offers significant benefits for your business. It allows you to closely monitor customer payment patterns, which is invaluable for cash flow management. By keeping it updated, you ensure accurate financial reporting and can quickly identify any overdue payments. A well-maintained sales ledger is a powerful tool for maintaining healthy accounts receivable and making informed financial decisions for your company.
Thanks for watching. If you found this helpful, don't forget to like and subscribe.